Well, g'day there traders, thanks for tuning into this weekend edition, taking a look at the Dow Jones Industrial Average, the SP 500 and also the Nasdaq. What I'll do for you is actually address some of the sentiment shifts which are taking place right around this resistance level and this all-time high level at around 16,500. So what has been, for the better part and for the most part, quite a bullish week, which was really set us up for the first week of April 2014. On Friday, what we've actually seen is what we call a one black crow candlestick pattern. Now, what this has actually done is really negated the previous 3 days, 3.5 days of the bullish price gains which we saw in the Dow Jones Industrial Average. So what I'll do for you is if I just change from this daily sort of time frame into what we call a weekly chart, what you can essentially see is what we call a shooting star candlestick pattern. Now, this is a very bearish signal and it's occurring in the right location. When we speak about candlestick patterns, what we really want to understand and what makes them so effective and so efficient is when they occur at the right location. Often you hear people say that what validates their being is location, location, location. And what I want to draw your attention to is a shooting star which took place in 2013 at what was also a relative high at a very strong resistance level, and a very compelling sell signal which took place. As you can see, after the shooting star candlestick which occurred during this week in 2013 at this resistance level, we saw essentially 2 weeks of strong selling pressure before we got that hammer candlestick with that lower wick telling us that there was buying pressure in the market. So although at the moment, right, we're at a very strong resistance level, we've got that first shooting star candlestick early reversal warning signal. What could be setting up at the moment, if we change back to the daily on the Dow Jones Industrial Average, is the potential for a little bit of a pullback in the overall Dow Jones Industrial Average. Now, this doesn't have to occur, but the probability of that occurring probably outweighs that of the market continuing to break out. So what we've done anyway here at Pivot Point Trading, and then what we've done in our Pivot Point Pro Analysis class, is set up these two triggers. Now, these triggers haven't really changed much for the most part of 3 weeks. We have a bullish trigger which has been set up at 16,665. What we want to see is a close and a continuation above this trigger to be entering into sort of bullish call positions across many of our individual shares and also the market ETFs. But if in fact this is a top and it is a peak and it is the potential for a rollover or something much more sinister, we still have that 16,014 bearish trigger which will enter us into, again, the complete polar opposite positions. So you can see that we always approach the market with a very neutral bias leading into the trading week. Sometimes that bias or neutral bias is really pushed to one side if of course, the technicals are compelling enough. But at the moment, we're getting some really convoluted and mixed signals across all 3 of the markets that we really need to sit back and just be a little bit patient with the way we approach the market. So one other thing which is really sort of hitting our perspective or sort of changing our perspective is the fact that all 3 markets are not in agreement. Now, with the S&P, we really wanted to see the S&P and also the Nasdaq for that matter breaking out to all new time highs or at least multi-year highs, with the Dow Jones Industrial Average also doing that. That hasn't been the case, and as you can see, the Nasdaq is actually broken down and it's starting to set up a series of lower highs and also lower lows. So you can see that technically speaking, the trend is starting to change. Now, although it looks as if it's starting to change, this is really caused by a lot of the heavily weighted tech stocks like Apple, Amazon, Baidu, Google, and Netflix, which have been going through an absolutely horror run bearishly, okay? Pardon me. So it's really weighing down the overall market. Now, the interesting thing is that a lot of these shares are at very strong support levels, and this could be the position where the Nasdaq bounces, right? And it continues to move higher. So we are getting conflicting signals. We've got the Dow Jones and the S&P on the precipice of breaking out. We've got the Nasdaq breaking down and what looks to be a terminal trend reversal. It's going to be interesting to see which way the market wants to move. But for the most part, please remain neutral. And if you enjoyed this video anyway, we can progress, or you can progress into some additional analysis of our top 12 individual trade shares. So I'll do that in the next video for you. Now, this was quickly, or what this video was, or its purpose was a quick market update leading into trading, of course, beginning Monday, the 7th of April, 2014. Thanks a lot, everyone. If you enjoyed it, please give it a like, give it a thumbs up, give it a share, or have a look at our website, pivotpoint-trading.com, and apply for a free trade scholarship to learn how to do this for yourself autonomously and profitably. Thank you, everyone. Goodbye.